Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are going to talk about some of the most popular technical indicators. My name is Barbara Armstrong. I am a coach with Charles Schwab and senior manager. And so, what is a popular technical indicator? Probably the most popular one would be a simple or an exponential moving average. The MACD is another popular indicator, and so are the stochastics. In upcoming weeks, we'll talk about other indicators as well, like Bollinger Bands or Fibonacci is more of a measuring tool than an indicator. But, in this Getting Started with Technical Analysis series, if you're new to charting, there's a lot of ground to cover. So without further ado, let's get into it. I have got Mr. James Boyd with us in the chat. And, he is a friend and a fellow coach. We tease each other a lot, but underneath it all is really a great friendship when I don't want to, go over and plant another couple of dozen Canadian flags in his yard. So if you are not following James, he is a prodigious poster on X. You're going to want to correct that situation and follow him at James Boyd CS. I also am posting on the daily on X news you can use, so you'll want to be following me on X as well at Barb Armstrong CS. And just keep in mind that in this introductory level class that everything we're covering here is for general information purposes only. Nothing that we discuss is to be, interpreted as a recommendation or personalized investment advice. We use the Paper Money software application on the Thinkorswim desktop platform. It is a great place to learn and become familiar with the platform, become familiar with your trading plan and the mechanics of how to place trades, etc., before you consider trading in your live account. There are some nuances and differences. One is that dividends, if there is a dividend, are actually paid in a live account. They're not in paper money. And dividends can change at any time, whether you're in a live account or paper money. Short options are never assigned early in paper money, and that can happen in a live account. So there are some nuances and differences that we need to be aware of. I designed this to be taught in about a 9-week rotation. We're at week 8. So if you're just starting, don't think like, oh, well, I may as well sign off because I didn't cover the last 8. I'm not assuming that you've covered anything, but if you'd like to give Netflix a rest and do some binge learning, you can subscribe to the Trader Talks channel from Schwab Coaching, and it looks like this. And you can what comes up when you first get in here, when you go to the Trader Talks channel on YouTube, is whatever is currently being taught. But if you click on playlists and scroll down, and the Getting Started, I don't know why the Getting Started series all seem to be, tucked in at the bottom. Here's the Getting Started with Technical Analysis series. You can go back and do some binge learning. Okay. And, starting at week 1, and we're now on week 8. Now you'll see this candlestick patterns, and this is a 3-minute video. There's another playlist, and those are kind of tucked in as I record them. But if you're new to charting and candlesticks, I've created a folder called the Trade Management Mini Sessions. And if you come to that playlist, you've got at the top all of these short videos on candlestick patterns grouped together. I'm also going to reference a trading plan that we talked about in this class a few months ago, and a simple stock investing sample trading plan. Okay, and that's in this Trade Management Mini Session folder. Also, again, you'll want to follow that Trader Talks channel. For those of you usual suspects like Will and Sharon and Greg and Jay, you guys all already know where these are. But for those of you that are new, if you're not familiar with it, here's another resource that you can access. Okay, so today, popular technical indicators. So we're going to define what those are. We're going to review some common types of indicators. We're going to look at moving averages, the MACD, relative strength, and then look at how we can use those both bullishly and bearishly. We're going to spend a lot of time on looking at charts, because I think that's where, we see these concepts brought to life. So there are hundreds of technical indicators. The first week I worked as a coach, I got a call from someone who asked me what the Darvas indicator was, and there wasn't a single coach on the team that had ever heard of it. It was created by somebody who was a professional ballroom dancer. So I mean, if we come out to Think or Swim, and we come out to studies and edit studies, we aren't even out of the A's, like there's dozens and dozens, like there's literally hundreds. And so we aren't going to begin to cover, we're going to look at 3 or 4 of those today, but there are an awful lot of indicators out there. Okay. So just so you're aware and saying, well, why didn't she talk about this one? Well, you'd have to pack both lunch and a dinner and an overnight bag if we wanted to go through them all. Okay, so there's hundreds of these, and different strokes for different folks, right? But most of these indicators are either considered trend indicators or momentum or oscillating indicators, and our trend indicators tend to show up overlaid on the chart, on the price chart, and the oscillating indicators are typically in a separate window below the price chart. Okay. I think it was the Darvas indicator. That was the ballroom dancer. I had to laugh when I found that out. So here are 2 examples of technical indicators, the MACD and the stochastic. That, along with relative strength, are probably, 3 of the most commonly used. And how are they constructed? Well, it's using historical price activity and volume levels, or a combination of both. And it's just another tool you can use to verify or lend greater clarity to what you're seeing in the chart. And sometimes we're going to talk more about divergences next week. These may give you an indication that what we're seeing on the charts may be starting to slow down. And a divergence can give us that information. So, okay, sorry. You guys can hear me okay? All right. So the difference between a simple moving average and an exponential moving average is that with a simple moving average, if we're using a 30-day moving average, for example, we just add up the closing price every day for 30 days and divide that by 30, and that gives us our point on the chart. With an exponential moving average, we give heavier weighting to the most recent days. And so some will say it's a faster moving index. Okay. And it represents the average closing price for either a stock or an index over a selected time frame. So it could be a 5-year monthly time frame. It could be, a 1-day, 1-minute time frame, but it's, changes over a period of time. And from those points, a line is created on your chart. And so for me and for many traders, a moving average just kind of leads the eye and kind of helps make sense of what we're seeing on the chart. And so it's used to identify trend. And for some, it might be used to generate a trade signal. And that example trading plan that we created, we used trade signals on a chart. And let me just show you how we did that. So you'll see here that I have Walmart up, and you can see that when this is the red line is a 30-day moving average, the blue line is a 10. And on the 30-day moving average, if the stock closed below the 30-day moving average, it generated a red arrow and then a green arrow if it closed above. So we can see here, it closed below, we had a red arrow. move back above. And so some might look at this move above and say, hey, I see that as a potential buy signal. Okay, because it's come down and kissed the 30-day moving average and is moving back above. And how did I get that on my chart? If you come to studies and edit studies. Now, if you don't have a simple moving average on your chart, you just start typing in simple moving average, click on it and add selected, you can see that the default is 9. So if I wanted to add a third moving average, maybe I want to make that a 100-day moving average. And I'd like it to be a little wider so it's easier for you to see. And let's make that black. Now, why do I make the 30-day red? Because when I was a client, the first coach whose classes I went to on a regular basis, he made his 30-day moving average black. So it was that easy. So if I come to this 30-day, you'll notice it says close 30, 0, yes. And these other ones say no. Well, if I come to this sprocket, it says show a breakout signal. And the default is no. When I put the yes in, then you'll get those little red and green arrows if it closes above and below. Now, some people might also, and with the MACD here, I added that again just by coming to edit studies and type in MACD. And I chose the MACD histogram. And then I added it. And then when you hit apply, you'll see it appear. Now I already have that on my chart, but you can add an entry and exit signal on the MACD if you want as well. Say show a breakout signal. Now some people may just want to eyeball it, but you'll see that now when I've added that, it gives me, you know, a buy or sell signal when it's crossing the midline. Now, the MACD tends to be a lagging indicator. So even though, you know, we have a sell signal here, and this is now back above the 30-day and is moving up bullishly, we don't have, you know, the next buy signal on necessarily the MACD. Okay. So coming back to our charts here, you know, we'll say that if the simple moving average is rising, we can, you know, look at that as a bullish trend. If it's falling, we call that a bearish trend. Okay, so, you know, on this chart, you know, this is a pretty significant uptrend, isn't it? In fact, if we had a 10-day moving average on here, this would probably be using something like a 10-day moving average as a support level. And so what might a signal be? Well, you might say, well, this is a bearish signal when it closes below this line. And this is a bullish signal when it crosses above, or when it comes back to this line and bounces, it could be considered an entry. And, you know, so that's just examples of how we can use a moving average to guide us with respect to entries and exits. Now with a MACD, you know, we're using the distance between two moving averages, and the default tends to be a 12 and I think it's a 12 and a 26. Well, I've got the default on my chart. It's a 12 and a 26 day moving average. And you can customize those if you want. But I always figured, you know, a default is chosen for a purpose. And if your purposes, you know, are different, you can certainly, you can customize it. You know, but we're looking for shorter term, you know, changes in price momentum. And, you know, so it's oscillating from, you know, red to green. And in this case, you know, and we're going to talk about this more next week, but, you know, when I talk about a divergence, what do I mean by that? Well, what we're looking for here, we have our MACD is high here. Okay, why does my drawing tool not want to draw for me? Let's try it again. Oh, you know what? Here we go. So here we have a high and then a lower high, but here on the charts, we're going from, a high to a higher high. And so what this is saying, and these don't always follow through, but it could be a slowing down in momentum. Okay. So, and again, like I said, we'll talk about this more in an upcoming session about divergences, but that's another reason that some people might choose to have a MACD up on their charts. So, and this is commonly used by technical traders. In other words, people that like to look at the charts in addition to other indicators as a confirmation of what they're seeing on the chart. And this line here, this baseline or signal line, some might call it the zero line. We're seeing that this momentum indicator rises and falls through that. And another indicator that is commonly used is relative strength. So, and they say that when something is below, when the relative strength is below the 30, it's oversold. When it's above the 70, it may be overbought. And, and it ranges from 0 to 100. And so this is just another indication of strength. Okay. The RSI. So let's get out and look at some charts. And especially, when we look at the markets today, there's a lot of uncertainty. There's a lot of fear in the markets. And if we come and we look at the SPX, we saw that, like we have an intermediate term uptrend, but this closed below a recent diagonal support line and really started tanking earlier in the day, and now it's come back. And the reason this candle has a red outline is it's still currently trading below yesterday's high, but it opened here, came all the way down, and is now trading above where it opened. So it's rallied, it's both dropped and then rallied pretty significantly throughout the day, but we're still down 0.8%. And when we look at the NASDAQ, we're going to see a lot of similar candles here. Now, this one is less dramatic, but again, it opened lower and it's moved higher. We're down about 1% on the NASDAQ. And this diagonal support line, I mean, it's not a finite number. It's indicating a range. And some might say, well, why did you even draw it like that? I would draw it differently. Well, you can draw it however you like. Whoops. I like to draw from body to body. And I know James is kind of a similar disposition, James body to body Boyd. But, we're in this neighborhood of a support level. And people don't like it when we're flirting both above and below the line. It creates nervousness, and understandably so. And the same thing on the Dow today. So, it's come down to this 100-day moving average. It broke below, and it's still below this recent support level as of today. And again, we have a really wide range on today. This today, it's moved $9.74, which is a big day for this. But it came way down and then it's rallied, and we've got a hammer, which is considered a bullish sign at a potential support level. And then our volatility index, particularly for those who like to trade options, and if you're a seller, we haven't been up in this $23 range. And at one point today, we were up above 28. I mean, this is heady stuff. We haven't been that high, but 3 days out of the last 9 months. So there's a lot of fear and uncertainty, and understandably so. And the markets are reacting to that. But if we come and we look at a particular an individual stock, like if we look at ADI, for example. So we have a stock that was kind of going a whole lot of nowhere. In fact, it was slightly downtrending and then it broke out, and it's been uptrending pretty much ever since. It came down and kissed this 30-day moving average. It's really been using the 10-day moving average as a support level. And today it dropped and it's still down 3%, but does one day make a trend reversal? You know, I say nay, nay, like we're not even below the 30-day. This thing has been on such an upward trajectory, you know, and it would be a little more concerning if this was still trading below where it opened, but we have a bit of a doji pattern happening here. And so some might say, well, it's a day to exercise patience. You know, and when I talked about this red and green arrow, you can see that we don't even have our last red and green arrows happened back here in November. And then it came down close. And so some might call this a phantom red and a phantom green because it came close to playing kiss and tell, but it didn't quite close below. But some might have considered that another potential entry right in this neighborhood here. And so is this perhaps creating a potential opportunity? Well, we don't know yet, but it's possible. If we look at something like Walmart. Now, you know, with Walmart, and this is just 6 months, if we come out, say, to a 1-year chart, we've gone from $80 a share up to 134. And it hasn't like raced up the hill, but it's just been kind of quietly, you know, uptrending. And, you know, it came down and hit this 30-day moving average. And again, some might call that a phantom red because it traveled below the 30-day moving average and then closed just above. You know, but it's moving up again today. So some might say, well, if I were to be bullish in the short term, you know, this is a stock that is in the what category? What sector is this in? Well, if you're not sure, if you come to the Analyze tab, it's considered a staple. In fact, I think Walmart sells like a third of the groceries sold in the US, or something in that neighborhood. So if you said, well, we have an up day today, in spite of the fact that, you know, the major indices are down, it's bouncing off this support level, this, you know, 30-day moving average, which has been acting as support for months now. And if you aren't sure about long term, you could say, well, I could do a swing trade. And a swing trade is just trading back up to the previous high. So you might want to make that, you know, 134, 134.50, and say, I'm going to buy 100 shares of stock. And where might I put a stop? Well, you might say, well, if it's been using, this stock has been using the 30-day moving average, has been acting as a support level. Maybe I look at that 124.68 and we put a stop, say 2% below that. So our stop would be at 122.18. And then we put a target up here around that 130, maybe 134.50. Now we had done this with AU in the trading a smaller account class. And yesterday, you know, it was within like $1.20 of that target. What did I say? 134.50. And then if we want to show that on the chart, we can put that there. And yesterday it was within $1 of that target. So we decided to take the money and run. And then today that stock pulled back. So, you know, if it gets up close and then we get a candle pattern indicating that this, you know, uptrend may be ready for a little break, there's nothing to say that you can't, you know, exit the position a little early. So if we come to our trade tab, how would we put that in? We're going to buy, well, we have a $500,000 account, so we can have a $25,000 position. So we're going to buy 200 shares and we're going to buy custom with an OCO bracket. We're going to put a target in of 134.50. and we're going to put an exit in at 122.18. $122.18. And we're going to make this 200. And then when I click this firecracker and turn it into a paper clip, and then click anywhere on these 3 lines, it will even up the quantities. We're going to make these good till canceled. Confirm and send. So we're risking $5.74. And there's no guarantee, like if Walmart were to gap down, we could end up losing more than this. And now if it gapped up, we could end up making more than this also. But, you know, this is when our exit would be triggered. And we're going to put that in our stock with targets. We're going to call that it's a swing target. So if we're looking at this in a couple of weeks and going, why did we pick that as our exit? Well, we'll know. Okay. Okay. So that's that one. Let's come and look at another chart. So we've looked at ADI. We've looked at Walmart. How about we look at JP Morgan? Now, did I look at this beforehand? Like, does this make sense? Well, you know, is the 30-day moving average acting as a support level or a resistance level? It's not. Is the 100-day? No. How about the 10-day? None of them. It's trading in a sideways range. And so, you know, what do we do when something's in a sideways range? Well, if you own the stock, you might say, well, when it comes up and bonks its head on resistance, I'm going to sell a covered call. You know, and you might say, well, I'm going to sell it here, and then what do I do? Well, you may just wait for it to lose value, or you could say, you know what, I'm going to sell it when it gets up here, and I'm going to buy it back when it comes down and bounces. So I might have, you know, bought it back either here or here. And then when it comes back up here, I'm going to sell another one. You know, and then you may have been hyperventilating a bit because it came up. But if you exercise some patience when it came back down here, sold it again, sell another one, buy it back when it comes down here. You know, now, if you don't own the stock, you know, what we've done with some stocks like Apple that we're trading in a pennant range is said, when it comes down and it bounces here, I'm going to either, you know, I could buy the stock and sell it when it gets back up here, or I could buy a call. Or, you know, there's a number of other ways that you could recognize that this is a pattern and trade it accordingly. You know, and depending on what NVIDIA is doing, we might do this in our trading a smaller account on Friday. You know, we have a stock, it's had one trip to the upside and then it came back in. It's been trading in this range since September of last year. And, you know, does that mean this stock is dead to us? Well, not necessarily. You know, there's a trading strategy called a credit spread. And if you put a short put vertical and a short call vertical together, if those two got together, we call that an iron condor or credit spread sandwich. So, you know, a short put vertical means we're expecting the stock to stay above here. And a short call vertical means we're expecting the stock to stay below here. And when you put them together, we call that an iron condor. And so there's a way we can look at things, you know, and this isn't an options class. Chris, you've got it. It's an iron condor. But because volatility is high right now, selling strategies, of which an iron condor is one, it might be more attractive. And then if things settle down, you know, with global conflict, et cetera, that volatility might come out of the market. Now, if it escalates, volatility could go higher. So, you know, my crystal ball is at the shop. It's hard to tell where these things may go, but it's an opportunity for us, you know, to potentially trade. Yeah, so if this is a new strategy for you, if you come on Friday to trading a smaller account, we may look at that if volatility is still high, but you could also go to that Trader Talks from Schwab Coaching and just type in Iron Condor, and you'll see a number of webcasts that talk about that strategy. But we're looking at how we might use these indicators. So let's look at Microsoft. So we've looked at a stock that's uptrending. We've looked at a couple of stocks that are downtrend, going sideways. Microsoft is one of those that has been downtrending. Since when? Well, really since late in the fall, almost Halloween. It hit this high here, and then it went below the 30-day moving average, and it went up one day. One day it closed above that since the end of October. And we talk about, being cautious and saying, well, we just had 5 up days in a row. Isn't this a trend reversal? Well, it's just barely peeked its head above the 30-day moving average. And a friend of mine used to say, watch for something to cross the river and come back and test the ice. And then if it bounces, it might be a trend reversal. And this went across the river and then it broke back through the ice. So the downtrend continued. And we've talked about bear flags in this class. This would be, and bull flags as well, a classic example, right? Bear flag. Bear flag. Now, here, we have a little digression because this isn't a lower low. This is a higher low. So could we be forming a basing pattern here? Well, we might, or this might just be a sloppy bear flag and the downtrend could continue. Or it could be that it's going to start going sideways for a bit and then it might break to the upside. But the net of it is that by drawing this 30-day moving average on the chart, we can see that this has been acting as a ceiling, or to use the appropriate technical term, a resistance level for this chart. And even though you may be looking at this and going, well, Barb, look at this. We got 1, 2, 3, 5 out of 6 days have been up. It's yeah, is it back above the 30-day? Has it crossed the river and come back to test the ice? And you might be saying, but if I want to buy the stock, wouldn't I want to buy it when it's cheaper? Well, how about you buy it when you have a higher degree of confidence that it's finished falling? And how confident are you that it has finished falling? And you may be confident and I may not be, but what are your rules with respect to a bullish entry? This would currently not meet that example trading plan. Yeah, and could we look at relative strength? So when we look at these indicators down here, at the stochastic, it's saying it was oversold down here and it's now moving up. And this is moving up. But, we've got this is a similar high, much as this isn't even, let me change my drawing tool, because this is not really, this is still a lower high here. So this is saying, indicating a degree of bullishness that we are not yet seeing on the charts. And we've got, the stochastic is moving in this direction now. If we add RSI, this is relative strength. We've got a similar line here to the stochastic, don't we? It was in that oversold area. It's still at 41. It's below the 50 line, but it seems to be coming around the bend. But if what we're looking for in these, lower indicators is confirmation of what we're seeing on the chart. And what we're seeing in the chart isn't screaming trend reversal yet. That isn't to say it might not come. It's just not there yet. Okay. Now, if we look at paychecks, like here is something, I mean, this has gone from 161 down to 86. So almost, a 50% fall in price. It's been trending below that 30-day moving average. It's peaked its head up, above once or twice and then fallen down below. And again, if we're just looking at the very short term, you might say, well, this is, didn't we just see this on Microsoft? Like 3 up days, 1 down day, and then 2 more up days. Like, doesn't this look interesting? Yeah. But is it above the 30 yet? Like, do we have some confirmation? Has it crossed the river? Hate to sound like a broken record, and come back to test the ice. Somebody's saying, why don't you use volume profile? Well, you know what? We had this conversation earlier. There's hundreds of indicators, right? But this, we're looking for kind of confirmation of what we're seeing on the chart. And with PayX, what we're seeing on the chart isn't like that trend reversal like we saw on, say, Target, where we had a stock that had a great fall, had a Humpty Dumpty moment, and then we see this big double bottom pattern where it broke out and is now continuing to move to the upside. We've got earnings, a beat on earnings this morning, which has led to a 6% increase today. And so with this one, you might say, well, it was falling and then it came up and came back down again. And this is what we call a double bottom with a breakout. But we haven't seen that on the other charts yet. Okay. How about CDP? So CDP, this is one of those charts where I call it a Tums chart, and I'm kind of tempted to try and draw some lines and make some sense of it. But the 30-day isn't acting as a support level. Like there's no moving average that's acting as a support level. So it's been kind of trading in a range. But and it's broken out and come back to retest and looks like it's moving bullishly. But when I look at the MACD, and let's just make the MACD a little bit bigger here. What I'm seeing on the MACD is a little concerning. And sometimes, you know what? This is it's giving us a false message, right? But what this is saying is like, okay, this is coming up and at least, maybe now trading in a new range. This is saying that momentum may be shifting, and we're seeing the same thing on the stochastic. And we're seeing the same thing on the relative strength indicator. And so this might just say, just be careful. Maybe there are other opportunities where there's more congruency between these 4 indicators. Yeah. Okay, just to look at another couple of charts. How about Micron? Okay, so with Micron, I mean, we've gone from $61 a share less than a year ago to $455 a share. It would be crazy talk to say that this is anything other than, a bullish trend, right? But we've had a bit of consolidation. And so, a bit of a pennant pattern setting up. Is that surprising after, this extraordinary run? Not really. And today it closed below the 30-day moving average for the first time. Like it's done that a few other times. It did that in December. It did that back in November. But Is this a trend reversal? So what we might say is like one day does not a total trend reversal necessarily make, but this is it's kind of sending up a bit of a flare because it is down almost 8% today. So it'll be interesting to see what happens tomorrow. It's saying, hey, caution, caution. We've got the, beeper going off. Okay. Okay, so guys, I hope you have found this helpful. You'll see coaches often talk about relative strength or the stochastics or the MACD. These are all indicators we can use. There are lots of indicators that we didn't get to. James likes to use a Hull moving average, and are yours 20 and 40, James? Like, some coaches will use a 20 and a 50-day moving average or a 30 and a 50. It really is personal preference. But the point of today was just to look at how we can use some of these oscillating indicators and momentum indicators to validate or give us a warning sign about what we're seeing on the charts. So I appreciate you guys joining me today. There is a survey in the chat. So if you click on that link, and James just reposted it, if you click on that link, there are 2 questions. 1, I hated this session. 10, I loved it, and everything in between. And then if you type a comment in, I promise I will read it. If there are topics that are not on the current schedule that you'd like to see me add, let me know that. Let me know what you thought of the pace. I promise if you put a comment in to read it. So in addition to that, if you'd hit the like button, it helps move this up in the trading algorithms on YouTube or in the algorithms on YouTube so more people can find this. As Cameron May likes to say, it also sounds like applause to James and I. So thank you in advance for hitting like, for subscribing to the channel, and of course, for following both James and I in the land of X, James Boyd CS and Barb Armstrong CS. And yeah, that's a wrap for today. Thanks in advance for filling out the survey. Have an awesome day. Up next is swing trading with Mr. Mike Fairborn. Take care, everyone. Bye for now.